Welcome back, children. Next we are moving on to the second method of calculating the national income, that is income method. Now I told you for all the three methods flow chart is very essential. It is with the help of the flow chart we calculate the national income. Now just as we have learned the flow chart for the product method, we will be learning the flow chart for income method. But one point to be noted, for product method your flow chart starts with GDP at market price, but here for income method your flow chart starts with domestic income, that is NDP at factor cost. NDP at factor cost is also known as domestic income. Now by adding what all components you will be getting NDP at factor cost, that is what we are going to learn. Now let us see what is the flow chart. Components of income method, flow chart. Now in the income method, what do we actually do? In this method, national income is measured in terms of factor payment to the owners of factors of production. Now in the product method we calculated national income by taking into consideration all the goods and services which are produced in the firms in all the three sectors. But here what are we doing in income method to calculate national income? So from the name itself it is clear, right? Income method. All the income which we are deriving, from where we derive the income? Through factor payments, because you know which are the factors of production. Which are the factors of production? Land, labor, capital and organization. These are the factors of production. What is the reward for all these factors? Land, rent, labor, wages, capital, interest, organization, profit. All these are the factor income. So factor payment and factor income. Those who are paying the factor income, that is factor payment. When we receive it, it is known as factor income. So when in a firm, when the producer is providing wages to the laborers, he is doing the factor payment, but labor is receiving the factor income. That is the difference, factor payment and factor income. So here in the income method we are calculating national income by giving importance to factor income such as land, labor, capital and organization. So once again in the income method we calculate national income by taking into consideration the factor income such as rent, wages, interest and profit. That is what is written here. In this method, national income is measured in terms of factor payment to the owners of factors of production. Factor payment, labor, wages is a factor payment which is given to the owner. Who is the owner? Labor. For labor we need to give wages. So factor payment and factor income. So on the basis of factors payment or factor income, we calculate national income. That method of calculating national income by giving importance to factor income is known as income method of calculating national income. So in the income method, how do we calculate national income? By considering the factor income such as rent, wages, interest and profit. Now let us see how do we arrive at the term NDP at factor cost, because in the income method as per the flow chart the first term that we are going to arrive is NDP at factor cost or domestic income. Now how do we arrive at domestic income or NDP at factor cost? NDP at factor cost is compensation of employees plus operating surplus plus mixed income of self-employed. When we add these three components, you will get NDP at factor cost. Which are the three components? Compensation of employees, operating surplus, mixed income of self-employed. Now you need to learn what is this operating surplus, what is this compensation of employees and what is this mixed income of self-employed. So by adding these three components, you will be getting NDP at factor cost. That is known as domestic income. Now, when you reach NDP at factor cost, you know how to go to NNP at factor cost, that is national income. NDP at factor cost plus NFIA. NDP at factor cost plus NFIA will give you NNP at factor cost. That means to move from DP to NP, we need to add NFIA. So, NDP at factor cost plus NFIA will give you NNP at factor cost or national income. As simple as that. But you need to know what all are there in compensation of employees, what all components are there in mixed income of self-employed, and what all components are there in operating surplus, because by adding these three you will be getting the domestic income. From the domestic income, by adding NFIA, you will be moving on to national income. This is the procedure, or this is a flow chart of income method. Now let us learn each and every components one by one. First, let we learn compensation of employees. What is this compensation of employees? What is compensation of employees? Components in detail. Compensation of employees. Compensation of employees means what? What is the difference between employer and an employee? Employee is a person who is working in a firm. An employer is a person who is running the firm. So, I hope the difference is very clear to you. Employer is a person who is running the firm. Employee is a person who is working in the firm of an employer. Now, when an employee is working in the firm, for the work that he has done, he should get a remuneration, isn't it? For example, if I am working in a particular firm, I should get the remuneration. That remuneration or wages is known as compensation. So, who is receiving the compensation? Employees are receiving the compensation from employers. So, I hope the difference is very clear to you. Employer and employee. Employer is a person who is running the organization. Employee is a person who is working in that organization. So, employee should receive the remuneration for the work that he is doing. That remuneration is known as compensation. That is why the first heading is compensation of employees. I told you in the income method, we will be calculating national income by considering all the factor income. Compensation, wages is a factor income. So, in the income method, we will be discussing all the factor incomes for calculating the national income, which will be given as three different headings as mixed income of self-employed, operating surplus and compensation of employees. So, first one, compensation of employees means all kinds of remuneration which is received by an employee in an organization. Now, mainly compensation of employees are divided into two. First one is wages and salaries in cash, and the second one is wages and salaries in kind. Both wages and salaries in cash and wages and salaries in kind are the two important parts of compensation of employees. Remuneration of an employee can be given in two ways. First one is wages and salaries in cash, wages and salaries in kind. So, this is a very important point to be noted. Compensation of employees means all kinds of remuneration which is received by an employee from a firm. How many kinds of remuneration that an employee receive? Employee will receive two kinds of compensation. One is wages and salaries in cash, and the other one is wages and salaries in kind. Now, let us see what all comes under wages and salaries in cash. Weekly, monthly payment, bonus, commissions, tip, house rent in the form of money, conveyance allowance for travel to and from work, to and fro, conveyance allowance. All these comes under wages and salaries in cash. Once again, wages and salaries in cash consist of weekly, monthly payment, bonus, commission, tip, house rent, conveyance allowance for travel to and from work. These are the components of wages and salaries in cash. Now, let us see what comes under wages and salaries in kind. It consists of rent-free accommodation. We just need to stay at home. The company will provide the rent. Then comes vehicle for personal use, recreation or holiday facilities, entertainment, company will bear the expense, medical expenses, meals while traveling on business, expense on children education, interest free loans. If you want to provide, if you have taken anything, the housing loans or vehicle, interest free loans, interest will be provided by the company. These are the wages and salaries in kind. So once again, wages and salaries in kind consist of rent free accommodation, vehicle for personal use, recreation or holiday facilities, medical expenses, meals while traveling on business, expense on children education, and interest free loans. All these are the components which comes under wages and salaries in kind. So compensation of employees consists of wages and salaries in cash, wages and salaries in kind. Then next one, social security contribution by the employers. To be noted, employers. All the social security which is contributed by an employer to the employee, that comes under compensation. So who is receiving all the social security? Employee. Who is giving that? Employer. So do not get confused. Social security contribution provided by the employer, not employee. Employer is providing to employee. Let us see what are these social security contributions. Provident fund, PF, gratuity, life insurance, etc. are the major social security contributions which are provided by the employer to the employee. So do not get confused. Social security contribution provided by employer to the employee. It consists of provident fund, gratuity, life insurance, etc. So the first component, compensation of employees, consists of three main components. The first one is wages and salaries in cash, wages and salaries in kind, social security contribution by the employer. So in the flow chart, we have completed the first component, compensation of employees. So compensation of employees consists of three components, which are they? Wages and salaries in cash, wages and salaries in kind, social security contribution by employers. Now the next component is operating surplus. What all comes under operating surplus? Operating surplus consists of rent and royalty, interest and profit. It is a very wide component. Operating surplus consists of rent and royalty, next one interest, and the third one profit. What is rent and royalty? It can be used together. Rent is defined as the amount payable in cash or in kind by the tenant to the landlord for the use of land for the production process. Normally, a tenant pays rent for the land which he is cultivating. Land actually belongs to the landlord. So he will be taking the land for the rent. So for that, rent has to be paid by the tenant to the landlord. That is rent, reward for the land. Again, factor income. Income method, we calculate national income using factor income. Next, royalty. Royalty is defined as the amount payable to the landlord for granting the leasing rights. We take house, land, etc. for lease. If it is taken for the lease, the lump sum amount will be paid by a particular person to the owner, and after that particular period the amount has to be repayable. So interest is a benefit for the owner when the whole amount is being paid by the user. So rent and royalty comes under the first component of operating surplus. Then comes interest. What is this interest? Interest is a factor payment. Definitely it is a factor payment, isn't it? capital interest. It is defined as the amount payable by a production unit for the use of money, whether borrowed or provided by the owner himself. So, interest. We use money for both production process as well as consumption purposes. Sometimes we borrow money for the production process as well as for the consumption process. If we borrow money, we have to definitely pay the interest. So, interest which is paid for the money which is borrowed for our need is known as the interest. The amount which is paid for the money that we have borrowed from certain units, either for production or for consumption, that is known as interest. So, interest can be paid for the money which is borrowed. For example, money borrowed from the bank, you have to pay the interest for that. That is known as actual interest. Or provided by the owner himself. Sometimes certain amount of money we have to sacrifice from our side for paying the interest. That is known as imputed interest. So, actual interest and imputed interest both comes under the rate of interest. So, interest is the second component of operating surplus. It is an amount payable for the money borrowed. It consists of actual interest and imputed interest. Then comes the next one, profit. I told you operating surplus consists of rent and royalty, interest and profit. Profit is defined as the amount payable to the owner of production unit for the entrepreneurship. It has three components. Now, if I am running an organization, the profit amount which I am getting, while running the organization, that is a component of operating surplus. So, profit is a reward. It is a factor income. It is a reward for my entrepreneurship. It is a reward for my organization skill. So, profit is an amount payable to the owner of the production unit for the entrepreneurship. Now, profit has three components. Let us see what are they. First one, dividend. You are very familiar with these topics you have learned in accountancy, right? Dividend. What is this dividend? That part of profit which is distributed among the shareholders is known as dividend, which is also known as distributed profit. For example, if 3 or 4 people are running an organization, the profit will be divided among these 3 or 4 people, isn't it? That is known as distributed profit or dividend. So, what is the definition of dividend? That part of the profit which is distributed among the shareholders is known as dividend or distributed profit. Next component, 3 components are there for a profit, right? Next component is corporate profit tax. What is that? That part of profit which is paid to the government as tax is known as profit tax. If we get the profit, we have to pay a part of it to the government in the form of tax. That is known as profit tax. So, profit tax or corporate profit tax is the next component of profit. Then comes the next component of profit, that is undistributed profit. What is undistributed profit? That part of the profit which is retained by the firms for the future use. Now, whatever amount we are getting in the form of a profit, we will be keeping a part of that profit for the future expansion or the future need of that company. We will not be using it. That part which we are keeping, a part of the profit which we are keeping apart for the future expansion of the company or for the future needs of the company is known as undistributed profit. It will not be divided among the shareholders. It will be kept for the future benefit of the or working of the company. That is known as undistributed profit, which is also known as corporate savings or undistributed profit or savings of the company or retained earnings of the company. So you have to be very familiar with all these additional names that you are learning for each and every component, because in your problem it can be either given in the form of undistributed profit or retained earnings of the company. So you should not be confused. So if it is given as retained earnings of the company, you should be able to understand that it is undistributed profit and it is a part of profit. Okay, so that is all about profit. So in the problem, it can be either given as a heading profit. If it is profit, all the three components are there. Sometimes to confuse you, both profit as well as dividend and undistributed profit will be given. So don't take dividend and undistributed profit, because in the profit as a heading, already all the three components are there. So for the exam, to confuse you, in the question, it will be repeatedly given as profit as one item, second item as dividend, third item as undistributed profit. So don't add dividend and undistributed profit, because already if the heading profit is given, everything is included in that. So you have to be very familiar with all the components. So once again, operating surplus consists of rent and royalty, then it consists of interest, which consists of imputed and actual interest, and finally profit, which consists of dividend, then corporate profit tax and undistributed profit. So we have completed the second component of the flow chart, that is operating surplus. The last one is mixed income of self-employed. That is what we are going to learn. Mixed income of self-employed. What is this mixed income of self-employed? It arises when the owners assume the role of worker, financiers and landlords. For example, a doctor who is running the clinic at home, he is the person who is sitting at the reception and handling everything. And it is his own building, his own service, he is doing all the work. So he is getting the income. His income is not diverted to anybody else other than him. So he is getting a mixed income of self-employed. Here, doctor who is running his own clinic at home, it is his own building, he is the entire work is managed by the doctor himself. He is the one who is packing the medicine, he is the one who is doing the reception work, he is the one who is treating the patients, everything is done by him. So mixed income of self-employed. So it means it arises when the owners assumes the role of workers, financiers and landlords. Example, doctor running a clinic by his own is an example of the mixed income of self-employed. So the income method consists of three components: compensation of employees. Compensation of employees consists of wages and salaries in cash, wages and salaries in kind, social security contribution by employers. Then it consists of operating surplus. Operating surplus consists of rent and royalty, interest and profit. Interest consists of actual and imputed. Profit consists of corporate profit tax, dividend and undistributed profit. And finally, mixed income of self-employed. So we will move on to the flow chart once again. We will go to the flow chart once again. The income method, compensation of employees plus operating surplus plus mixed income of self-employed will give you NDP at factor cost. Adding NFIA to NDP at factor cost will give you NNP at factor cost or national income. This is how we calculate national income through income method. Now there are precautions for calculating the national income through income method that we will be discussing when we are doing the numericals. Hope it is very clear to you. Thank you.